Hey, what's up, y'all? Classic Kev back with another episode. Y'all, honestly, it's probably the most important episode yet because on today's episode, guys, Cathy Woods, the CEO of ARK Invest, one of the most well-respected people on all of Wall Street, has a wild Bitcoin price prediction you guys are going to want to hear. So let's get straight into it, guys, by looking at these markets. So, guys, the markets are doing quite well today, I'd say. Bitcoin up 4%, sitting at 21,000. Ethereum up almost 7%. But the biggest one of the day, guys, Polygon Matic that we've talked about on just about every episode, up 21%. So you're going to want to stay to the end of this episode, guys, because I got some Polygon Matic news at the end of this episode that we're going to cover. But what I think is the biggest story today, guys, I want to get straight into it. The Daily Hodl posted this article. Bitcoin will explode by over 4,600%, according to ARK Invest CEO Cathy Woods. Here's her timeline. The founder and the CEO of investment management firm ARK Invest, Cathy Woods, is doubling down on her fiercely bullish forecast for Bitcoin. Asked in a Bloomberg interview whether ARK Invest is still holding on to the $1 million forecast, Wood answers in affirmative. According to Woods, Bitcoin could go above $1 million by 2030, an increase of over 4,600% from its current price. So that's right, guys. So Cathy Woods, the CEO of ARK Invest, is saying that Bitcoin will hit $1 million by 2030. What do I think? Yeah, I think she's right. I think Cathy Woods definitely knows something that a lot of people don't know. Cathy Woods is one of the most respected people on Wall Street. She's got her finger to the pulse, technology. She's big into Tesla. ARK Invest has a lot of technology firms that they're invested in. So I truly think that she knows something that, the retail investor doesn't know. And, but again, guys, getting to $1 million per coin from 20,000, that's going to be a bumpy ride. There's going to be, I believe there'll be a ton of volatility in getting there. But again, guys, the volatility, that's when I'm going to be buying. I buy when on the red days. You don't want to buy, when Bitcoin's up, 10%, or 5% in a day. You want to buy on the pullback, right? So, now let's get into the next story, guys, that's going to kind of further illustrate this point. So check this out, guys. So this is investing.com, guys. Fidelity opens waitlist with zero fee for retail crypto trading. So Fidelity Investments has launched its brand new crypto trading product. The platform is launching commission-free crypto trading for its retail investors. The firm opened an early access waitlist to its users. So Fidelity, I believe Fidelity is one of the largest banks in the world. I think it's the largest 401k management firm in the world. So they hold everybody's retirement accounts, ton of capital, and they're allowing their users to buy and sell cryptocurrencies with no fees. Again, guys, let's not lose sight of what's really happening. So let's think of what Cathy Wood says. Bitcoin's going to $1 million per coin, and now you see Fidelity saying they're going to allow their clients to buy and sell cryptocurrencies with zero fees. These are the same people, this Wall Street, these big banks, these hedge funds that said crypto's going to zero, that crypto is beanie babies, that, insert, the CCP, the Biden administration is going to ban cryptocurrency, and a guy in his garage has been telling you for the last 2 years that none of that was going to happen. And look at how the tide is slowly turning. Guys, this technology is the future. Now, I don't know what the future world's going to look like, guys. We're in some crazy, uncertainty, geopolitical time. So I can't predict what the world's going to be, but I do know that the future society, cryptocurrency has a huge role in. Again, guys, I've owned an ATM company, own a credit card processing company. I have extensive knowledge of how these systems work, how antiquated they are, and basically cryptocurrency solves so many problems. So let's get into the next story, guys. MasterCard welcomes 7 crypto blockchain startups to FinTech Innovation Program. Again, guys, another big company, another big Fortune 500 company embracing crypto technology. MasterCard's, one of the largest companies in the world, and they're embracing this technology. Huge other story, guys, I wanted to talk about. Yuga Labs is hiring the best and brightest to build the next internet. So guys, that's right. So that's kind of what Web3 is. Web3 to me is the new internet. Web3 is, it's not just NFTs. It's not just pictures of monkeys or anything like that. This is true ownership. And check this out, guys. This is a quote from the article. Jenkins the Valet, which is one of the Bored Ape in the collection, has created a media company built on creativity, storylines, and expanding the Bored Ape universe. Also, Bored and Hungry is an awesome fast food chain in Los Angeles, and I think they're expanding to other markets. Guys, they talk about the other side metaverse, which I'm invested in. And they talk about just true ownership of assets. Like, what crypto allows us, NFTs allow us, is a sense of ownership that is 100% ownership. Unlike any other asset we've ever had before, that's what this technology brings us. Guys, I'm super bullish on Yuga Labs. I'm super bullish on, the Bored Apes. I just think they're innovators, guys, and that's where I want to put my money. I want to put my money in companies that are innovating, that are really pushing the envelope. And if I'm wrong, guys, but I truly believe that the Yuga Labs team, that they are the pioneers, and whatever, guys, we don't know what the metaverse is going to be in 5 years. We don't know what the metaverse is going to be in 2 years. But I believe that Yuga Labs will be known as the architects of building what the future metaverses are going to look like. They're going to innovate it. Other companies will copy off of them, but we want to invest in the innovators. That's what I am doing. So, next story, guys. I want to talk a little bit about real estate, guys. I know some of you really aren't too much into real estate. Well, guess what? Here's the facts. If we have a housing market collapse, if we have a real estate crash, what do you think that will do to crypto markets? Obviously, a real estate crash would be bad for all markets, bad for the stock market, bad for, any equities markets, gold, silver, no matter what. A real estate crash is not good. So check this out, guys. I pulled up a historic timeline of 30-year mortgage rates. So in 2021, we were sitting at 3% right here. And we know that the Fed has raised interest rates to combat inflation. Now, I want to ask you, we've passed legislation, the Inflation Reduction Act. Do you guys see inflation, any pullback in inflation? I don't. But what we've seen, these raises in interest rates actually hurting the real estate market. And if you're wondering how high can these interest rates go, well, the higher they go, guys, the harder money's going to come by. The harder money is to come by, the less speculative assets, which, let's face it, guys, crypto is a speculative asset at this point. The more these assets are going to, in the short term, are going to get hammered. So I want to focus in on from 1979 to 1989. Guys, look how high interest rates were. They were over 10% for 10 years. If you correlate these interest rates to what home prices were, you guys, in the 80s, you were buying houses for $60,000, $70,000. Ask your parents. So what I believe the correlation is, and I could be wrong, guys. I'm not a real estate professional. I'm not a mortgage analyst. I'm not any of this, guys. I live in my mom's garage. But what I correlate this to is the higher the interest rates are, the more it's going to hurt real estate markets, because if the interest rates are high, investors can only afford a monthly note of X amount. So the interest rate is going to correlate the price of the real estate because it has to be priced to sell. So we could look in the past. Guys, in 2008, we had the huge housing market crash. Well, guess what? The interest rates were just about the same in 2008 as they are right now. Coincidence? Possibly. So what I'm expecting, guys, because we've seen massive appreciation in the real estate markets. We've seen in the last 2 years, guys, ask around, especially South Florida. South Florida, you're seeing properties 3X and 4Xs in the past 2 years. I'm not saying those properties aren't worth that, but what I'm saying is real estate traditionally appreciates like 5 to 7% per year. So if you're seeing a property appreciate, 3X and 4X, that is entirely too much appreciation too fast. There has to be a pullback. But again, that's our buying opportunity. I'm going to be buying real estate definitely probably in the next 2 years. But again, guys, there's realtors out there, there's mortgage professionals that say there's going to be no pullback. That's crazy. So something we're going to keep an eye on, guys, because like geopolitical events, real estate market, it's all correlated, guys. It's good to know about all this stuff. So let's get into some Polygon Matic news. I know you guys are seeing this surge in Polygon Matic. You know, if you're a Polygon Matic investor such as myself, you're happy. So check out this Crypto Potato article. 3 reasons behind Matic's 17% surge to 17 weeks high. Let's talk about it, guys. So the first point is Meta picks Polygon for NFT minting. We talked about that, guys. I mean, guys, look, you know, I'm not a fan of Facebook. I'm not a fan of Mark Zuckerberg. I'm not a fan of Instagram. But it is one of the largest, most successful companies in the world. And just the fact that they've chosen Polygon Matic to handle NFT investing, NFT minting and trading on their platform is seriously bullish. Is probably, I mean, I could stop right here, guys. It's definitely one of the most bullish indicators for Polygon Matic. So I can't say enough, guys. I think that, oh man. The next thing, JP Morgan taps Polygon for DeFi trade. Shortly after the Meta partnership news was announced, JP Morgan, one of the biggest banks in the United States, has completed its first DeFi trade in the Polygon network. The transaction was part of a Project Garden and DeFi blockchain pilot program launched by Singapore's central bank, the Monetary Authority of Singapore. People familiar with the matter said that the Wall Street powerhouse wanted to conduct a trade on Ethereum and selected the Layer 2 solution because of its cheap transaction fee. That's right, guys. So what I view Polygon Matic as is like, you know, it's the Layer 2 for Ethereum, but it's basically Ethereum with none of the problems. So big industries have chosen it because they get all the benefits of Ethereum with none of the negatives. So it's truly becoming an industry leader for scalability, cheap fees, and we're seeing more and more big companies. I mean, Disney's adopting Polygon Matic. So again, guys, if you're in Polygon Matic, I'm not telling you to buy this coin. I'm not telling you to sell it. I'm just telling you what I'm doing. And it seems to me, and for any of you that's watched this channel, and look, if you made it this far in the video, man, drop a 100 emoji in the comments. Thank you so much for watching. But if you're investing in Polygon Matic, you're front running the smart money. So you are smart. Congratulations. You know what I'm saying? And again, we covered Polygon Matic, I think, when it was like 25 cents per coin. It's gone up all the way to almost $3. So, guys, we'll continue to cover it, and I'm just super excited. I'm super excited about this coin, and I'm so happy for all of you that, you know, a lot of you have sold and taken profits. And again, guys, great job. Great job. This is the third point, Polygon Aval update. I don't know much about this, guys, but this is just another update, I guess, to help it create side chains and just to help it become more scalable. So again, super bullish news for Polygon Matic investors. All right, guys, so let's get to the next piece of news. Super big news. Coinbase CEO says USDC will become the de facto central bank digital currency. Company posts week 3 earnings. So the CEO of Coinbase is saying that USDC is going to become the next, the de facto central bank digital currency. So for those of you who don't know what USDC is, it's a stable coin that's pegged to the dollar. Basically, you need stable coins in a crypto market because it allows liquidity. You know, so you need something that's pegged to the dollar so that people can, you know, put their money in a stable coin and then make transactions because cryptocurrencies such as Ethereum or Bitcoin are so volatile. So stable coins is what kind of regulates the markets. Now, USDC, guys, I don't know everything about it, but it's basically built on a lot of different blockchains, some of the more popular blockchains. And let's go look at who is working with USDC currently. So this is straight from their website, circle.com. Stability you can trust. Known as a fully reserved stablecoin, every digital dollar of USDC on the internet is 100% backed by cash. So at least it's backed by something in short-dated U.S. treasuries. So that's always redeemed 1-for-1 U.S. dollars. Now, again, guys, you know, I'd like to see this audited to make sure it actually is backed by something. But look at this. USDC reserves are held in the custody and management of leading U.S. financial institutions, including BlackRock, who is the largest asset manager in the world, and BNY Mellon. Each month, Grant Thornton LLP, one of America's largest audit, tax, and advisory firms, provides third-party assurance as the size of USDC reserves. So guys, some of the biggest asset managers in the world are utilizing USDC. They're saying it's fully audited, that it's 100% backed, 1-to-1. Every USDC coin minted is backed by the dollar, and that I guess what the CEO of Coinbase is saying, that that's going to be your de facto central bank digital currency, that in the future that all Americans will be using USDC. If you go buy something at a store, you're going to be transacting in that stable coin, not exactly transacting in Ethereum or Solana or Polygon Matic to make purchases, that those cryptocurrencies are used for different things, if that makes any sense. Anyway, so super bullish news, guys. Super bullish news. So last article, guys, I thought this was interesting. I'd love to hear you guys' thoughts. This is from Decrypt. There is no second best. MicroStrategy would be up $1.6 billion if it invested in Ethereum instead of Bitcoin. So Michael Saylor, the CEO of ARK Invest, he's known as probably, I believe, the first Wall Street, first publicly traded company to make a large Bitcoin purchase and put it on their balance sheets. Now, what we're looking at is that instead of choosing Bitcoin, because Michael Saylor was pretty much a Bitcoin maxi, instead of choosing Bitcoin, had he chosen put the same amount of money in Ethereum, how much money he would be up. Now, this is straight from this article, blockchaincenter.net. There is no second best. MicroStrategy's Bitcoin holding, so they have 130,000 Bitcoin worth $2.692 billion. If they had bought Ethereum instead, they would have 5.7 billion. So definitely, you guys, we're just looking at the analytics. And so, guys, currently on their Bitcoin investment, they are down $1.29 billion, and they would be up $1.72 billion had they invested in Ethereum. So, guys, I invest in Bitcoin and Ethereum. I'm super bullish on both of them. I am more bullish in the long term on Bitcoin, but I do think the reason why you see the discrepancy in Ethereum seeing so much more appreciation is because Ethereum has more utility, guys. Ethereum's being used for NFTs, DeFi. It's just so much more utility, where Bitcoin is essentially just digital gold, just essentially a store of value. So in the long term, I think that his Bitcoin investment will pay off. But in the short term, again, guys, Monday morning quarterback, I don't think Michael Saylor is regretting buying Bitcoin. Guys, they're doubling down. They're buying more Bitcoin. They're working on more infrastructure for their Bitcoin investment. But again, guys, it's just interesting to look at it because I know a lot of you are seriously, not investing in Bitcoin and investing in Ethereum. So, hey, if you're looking at making money in the short term, the Ethereum investment paid off. Anyway, y'all, I'm Classic Kev. Thank you so much for watching. If you made it to the end of this video, drop me a 100 emoji in the comments, and I'm out, y'all. Peace.